Happy Chuseok everyone! With the market closed for 3 days and having talked enough about our economic anxieties over the past couple videos, today we're going to quickly cover some basic happenings in our market and let you enjoy the long weekend. You're watching Sekider, and today we're talking about two big IPOs coming out at the end of September and the beginning of October. Now before we continue, we'd just like to remind you that this channel is meant for general educational purposes only, and it isn't meant to replace the legal or financial advice from a paid professional. When it comes to investments, it's always healthy to take everything with a fair bit of skepticism regardless of the source, and that includes us. So for that reason, nothing we say here should be taken as a basis for investment, and you'll have to do your own work and thinking before deciding whether or not a position in any stock mentioned here is in your best interest. Want to figure out how? Well, if you scroll down a tiny bit and hit the like and subscribe buttons, we'll do our best to help you figure out how to figure out this game for yourself. That being said, let's get to it. Now, if you want to better understand how IPOs work, you may want to check out our video on IPOs and spin-offs released just before Kakao Bank's IPO at the beginning of July, which I will link in the top right hand corner of the screen right now. In the next few weeks, we'll be seeing subscriptions open up for a couple new companies that we believe are worth your consideration. The first of which is that of the company's top used car sales platform, KCAR. Now, KCAR, formerly known as SK Encar, changed its name after its sale in 2017 to Han & Company, who currently have a controlling stake in the firm. For those wondering, the current version of Encar.com belongs to a parent company, carsales.com, which is an Australian-based used car platform. Now, with this IPO, KCAR aims to further expand the efficiency of their supply lines and upgrade their online infrastructure in what is a roughly $40 trillion industry. Furthermore, according to Pulse News, the company aims to expand into the car rental space after its merger back in February with Joy Rent-A-Car, which was another one of Han & Company's subsidiaries. Now, an interesting thing about the used car market in Korea, outside of the fact that its total volume is almost about 80% of the new car market, is that Korea's top car manufacturers aren't even players in the industry right now. Now, back in Canada or maybe in the US, car dealerships regularly have both new and used vehicles in their lot with separate sales quotas for each category. Here, however, both Hyundai and Kia aren't even involved in the space in spite of the fact that importers like BMW and Mercedes sell their used cars directly to customers. Now, legally, there are no restrictions on this, and there haven't been for almost 10 years since the ordinances in place to protect small enterprises was lifted in 2013. So that begs the question of why Korea's largest car manufacturers haven't yet entered the fray. Well, just because legal protections for small car players has been lifted, it doesn't mean that they haven't actively been trying to defend themselves. In fact, discussions have continued over the past half-decade to find some common ground that would allow Kia and Hyundai to ease into the industry. Now, if that were to happen and the car giants began to sell used directly to their customers, it could severely affect the profitability of companies like Encar or KCAR or any small used car sales operations, since there is and always has been so much distrust in the secondary car market, and customers often feel more comfortable buying from manufacturers who they can hold accountable for any issues that arise. And that also extends to used cars because, again, you're buying from the makers of that car. So anyway, for anyone looking into this IPO, which is sure to be a big one anyways, this is definitely something to keep track of as time goes on. The details for the IPO are really quite simple, as they'll be conducting their forecasting on the 24th to the 27th of September 2021 before opening for subscriptions on September 30th and October 1st. If you're looking to grab some ownership in a dominant player in an industry that has been booming over the past year, KCAR's IPO is certainly something to investigate further. Now, let's talk about the other one. After much delay and a reevaluation at the behest of the country's Financial Supervisory Services, or FSS, Kakao Pay's IPO is back on the docket. As covered in the Kakao Bank IPO video, Kakao Pay was originally slated to open subscriptions back in August, so those who've been waiting since then will be happy to hear that they'll be forecasting on the 29th and 30th of this month before opening for subscriptions on the 5th and 6th of next month before their IPO date on the 14th. This comes after they reduced their target goal of raising 1.6 trillion won down about 6% to a range of 1.3 to 1.5 trillion. They aim to raise this amount with the creation of 17 million new stocks through a process that will be underwritten primarily by JP Morgan, Samsung Asset Management, and Goldman Sachs. Now, since their initial prospectus, the reduction in their goal isn't the only thing that's changed. As those watching our market recently may have picked up by now, the FSS has been further clamping down on overreach by large tech firms, and that includes the fintech sector in which Kakao Pay is a leader. In the case of Kakao Pay, these changes have already skewed a part of their business as they've recently had to halt services in which they recommend insurance programs that they predict their users will be interested in based on an algorithm that they've developed. This, the FSS claims, is outside the bounds of traditional advertising and is actually a sales operation due to the sale of specific funds as opposed to references towards top insurance companies. The latter here is basically traditional advertising, but the former, they claim, is a sales operation which therefore requires a relevant FSC license. Now, such services are important to the profitability and growth of firms like Kakao Pay, who aim to assist large insurers in their digitization through direct partnerships and algorithm development. For now, Kakao Pay has ceased these operations but has maintained their partnerships through the continuance of their services, albeit very blunted, and that just means they keep them in their banner ads. Now, as regulators continue to crack down on tech firm overreach, those investing in the sector will have to pay attention to what they see as fair game. Much of the tumbling of Kakao and Naver stock prices over the past few weeks can be attributed to anxieties about how deeply their profitability will be affected by the new regulations and how quickly and effectively they'll be able to adapt and develop new growth generators. Still, both of Kakao's subsidiary IPOs have taken off once they hit the market, and it'll be really interesting to see how the market takes to this third joint in the light of recent events. Once again, subscription dates are the 5th and 6th of October, so if you want to get in, you'll have until then to prepare. Alright, that's it for me. If you have any questions you'd like me to get into, let me know in the comment section below. Otherwise, we'll be back soon with more information on our market. Hope all is well. Stay up, fam. Peace.